Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so we begin. Today is March 11th, 2024. No data coming out today, but this week we have some pretty big data drops. Tomorrow on Tuesday we have a CPI print, and on Thursday we have PPI and initial jobless claims. Most notable news headlines coming out on markets is probably inflation coming back in China. What does this mean? What's going on here? I look into my crystal ball and I'll give you my insights. So we'll get back to that at the end. This is the S&P 500. We've had this trend line here. It looks like we hit it, so we're not completely bearish. We're not in breakdown mode after this epic tear up in markets, but once we do break through, it's fairly well expected for us to probably at least get to the bottom of this little run here, but we will see. Moving on to the VIX, we see the VIX kind of popping higher here. This could be a top in the VIX. We could see the market going up from here. It's hard to say. Moving on to the Qs, this is the QQQ. This is the ETF that follows the NASDAQ. On Gareth Soloway's show today, he had noted, he's probably one of the best traders in the world as far as reading charts go, at least that has public information out there as to what he thinks is going on. And he noted this trend line here, which we've hit several times, and we actually broke it here, but it didn't get confirmed. He's been saying that we've actually broken below this, and this is our confirmation candle, and so he expects this to be moving down in this market. And so I was able to grab a little bit of a short-ish position on this SQQQ to participate in this, because I think that it's pretty likely that we're going to be headed down here, and if we pop back into this channel, I can get out with minimal losses. Moving on to talking about China, the story here is that inflation is coming back to China, and some market participants are worried that that's going to bleed over into US markets. That's not how I see it. In fact, if you simply look at Chinese equities, for example, inflation going up is not a bad thing in China, because they have already been through the other side of the cycle. While we have been experiencing inflation that's too high, China's on the opposite. They're trying to get business to go up. They've been experiencing disinflation, maybe even deflation. They've been having deflation, and so now that they have inflation, for them right now, that's actually a good thing. And you can see that very clearly, like in KWEB, my favorite ETF to follow Chinese equities, just because it holds the most fun stuff, like the Amazon and those kinds of companies of China. And from this bottom here, really at the end of January, we've been seeing strengthening. We had China come out at these bottoms saying, hey, the government's gonna buy stocks, we're gonna do all the stimulus stuff, and already now we're seeing inflation come back. And in China, again, inflation is a good thing, not a bad thing. And so if anything, I could see perhaps in my crystal ball a rotation from the overbought QQQ to the CQQQ, which is another ETF that follows Chinese equities. An overvalued market to an undervalued market. It would make sense, at least for these markets, to come together to some degree at this point. All the stars are aligning, and it looks like that's how this is very likely to play out, in my opinion. That's all I have for you for today's show. I hope you enjoyed. Thank you very much for watching. Robschild.